Welcome to Undiscovered Traders,
And I just kept short scalping on interactive brokers.
a new podcast that focuses on the charts, stats, and edge of the latest six-figure verified traders who have not been interviewed before, if not rarely.
I froze. I didn't know what to do. And luckily, my broker started taking me out.
Today we're talking to Arsalan from Canada, Ontario, who was up almost $500,000. But after some recent losses, he's setting up a little under 200K. I'd imagine huge learnings and lessons that we're going to go through today. But first, Arsalan, how are you, buddy?
Good, sir. How you doing?
Not bad at all. Not bad at all. It's coming into summer here in Rio de Janeiro, and you're saying you're in Canada, but you wanted to travel a little bit and hit that Mexico, hit Rio, something like that. Live the trader lifestyle, live that laptop lifestyle.
Absolutely, man. I'm trying to get where you are. It's gonna get cold where I am, so not somewhere I want to be.
Dude, it's I think we've got the opposite podcast. But dude, I mean, when did you get into trading? What's the story? How did you get into it? And how's things going right now before we jump into your Kinfo stats, and then we'll go into some charts.
Okay, so my whole life I've been more of an entrepreneur. Prior to COVID, I had an electronics business. I was buying and selling electronics, primarily iPhones. And since COVID hit, everything got shut down, and I was left to pretty much play video games with my friends. So that's what we did to pass the time. And one day I was playing, I believe it was Call of Duty Warzone or something. And the headset, my buddies are talking about how this was right when the meme stock thing was going on around January 2001.
Mm-hmm.
And my buddy was saying how he bought a meme stock and he's up a lot of money. And then there's a bunch of them talking about how they're up a lot of money. And I was just like, what are you talking about money? Because in my head, I've always thought of the stock market as like a scam, or prior to this, like as something that wasn't achievable by a normal person. I don't know. I guess I make it seem so complicated by using words like alpha, data, all this stuff, right?
Mm.
And like, you know what I mean? So what I thought was, okay, so what's really going on here? I started talking to them. I started getting into it. I didn't even care about the video games anymore. I wanted to know what this was all about. And after talking to them a bit, I bought this stock called NAKD.
Yeah.
I went to the bank and I opened a brokerage account. It was like not even like a platform. It's like you go on the browser, you press OK, and it's like it refreshes. It's not even.
Yeah.
I literally just market ordered NAKD. I think it was I spent a lot of money because I'm a big hitter. I wanted to make money like them, and I think I bought like 14,000 shares of it, like an idiot. I bought way too many, and it literally at the market open I bought it at the opening print, and within an hour I think I was down like $6,000 or something like that. Yeah. So I got rid of it, and then I was like, okay. So now I could lose that much money, but I thought to myself, okay, like what's actually happening? And I started digging, right? And I ran into some streams by there. I know Sean Deckmore has a stream. I started watching that one. He had a free trial for, I believe, for 7 days or something. So I'm like, okay, he taught stuff. He had like a website with videos. So I started learning because I was at home anyways, right? So I started watching the market from 7 a.m. to 5 p.m. and I would sit there and I'd watch his stream. You'd have all the scanners up and everything. You didn't have to buy anything. He had everything up, and I would watch him trade. And eventually, what ended up happening was I got confident enough to, because he would promote people to paper trades. I got confident enough to go to get interactive brokers, like a real broker. I opened up interactive brokers. I put maybe a couple thousand in there because we don't have PhD in Canada. So, and what ended up happening was I started just paper trading with the demo account, and I was going long at first, but I saw that he shorted a lot. So I wanted to understand what shorting was. But on interactive brokers, they don't have the same short inventory as they would in the brokers that we have now, the premier brokers, right? So I didn't have much options with shorting, but whenever there were shares available on something, I would just short it and take like 10 cents on like 500 shares or like 100 shares. And I would just to kind of see where things were going. First, I would do it in the simulator, and once I realized, okay, I can kind of take extensions because a lot of things were popping and dropping in the COVID market. I'm not sure if you remember. Things would halt and just dump right away. I noticed that, so I would stay away from the main plays, the gappers, and like because before gappers wouldn't just crap, the gappers would keep going. I remember AUVI, it opened up at $3, gapped up from 150 to $3 in February 2021, and it gapped up to it hit like 34 at the highs. So if you were shorting, if you're a gap and crap shorting, you would have been blown up. So longing was definitely the way to go there. But so essentially, once I figured out that I could short the side stocks, that's what I would do with small size. And then once I got confidence and my account started to grow, I could put on more size. And then eventually what ended up happening was, I'm not sure if you remember the NFT craze, but there was an NFT stock called HOFV, and unusual whales, I think it's like a Twitter account. They tweeted something about some NFT thing in regards to one main runner. And then I saw the side stock HOFV, it started getting a few bids, and I just bought 1K shares right then because I had enough money. And then in the after hours, that thing gapped up, I think $2 from $3 to like 480 or something. And that's like what gave me like the buying power to start scalping bigger amounts. So then I just used that, and I'm like, okay, I'm just gonna short scalp now because there's no point of longing. Like I've lost so many times longing. This just worked out because I got the news before. What are the likelihood? What's the chance of me getting this again? And I just kept short scalping on interactive brokers. And then what started to hold me back was I didn't have inventory. So I had to get a premier broker. So once I got the premier broker in October 2021, it was pretty much go time. Like DWAC happened 2 weeks after. And PHUN was like the sympathy to DWAC. The next day, I think PHUN went from like $1 to $24. This thing was a thick float. It had like 200 million float. So the way I would scale into it is I would spread my ads. I would go like 100 shares at $12, 100 shares at $13.50, 100 shares at $15.50. And I would spread them out. And it's not like the smart thing to do, but obviously I was new to trading, right? And I would honestly just add, but I would make sure my ads are spread apart. And eventually I would have a stop, but that stop would be so far gone that I would lose a substantial amount, right? But luckily enough, PHUN obviously everyone knows this, but it went up to 24, halted down at 18. And then an hour later, it opened up at $8. So at that time, my average was like, what was it? Maybe $15, $16. I don't remember. And I think I was in like 4K shares. So right off the top, I was up 20 grand. And that just gave me more buying power to continue doing what I was doing. And then as you can see from my Kinfo, I got hot. And then when you get in the zone, like trading is very mental. Once you get into the zone, you just start to go, right? You just start to go. And I just kept scalping. And then I think my first big loss was, well, which ticker was
Let's say it was in, I can bring it up, right? So I can see, you can see the screen, right?
Pardon?
Can you see the screen okay on that? Yeah.
I can see it. Yep, I can see that. Yep.
Okay, awesome. So we can see your profit share, 177K, 90% win rate, or just under 90%. So do you want to talk us through kind of, because you can kind of, you've already started. Let me know where you were, because you got right up to 450 million nearly. And then what happened? Yeah.
That was TOP. And that was essentially just negligence on my part. I was hungover that day, but that's not an excuse. That's definitely not an excuse. But
it's a bad hangover. It's worse than the movie.
Yeah, man, the thing is, like, it just actually showed me, because at the worst, at the end of after hours, I was maybe down like 40K. And if I just got out before after hours, I was still up 40K on that month. I would have just taken 1 month away, and I would have had the confidence to climb back from it. But I just let it run. And as soon as the after hours kicked in, that stock rocketed like $10-15. So then I think I had like 10K shares in. So right away, it just turned into like a 6-figure, and I was just kept holding. I froze. I didn't know what to do. And luckily, my broker started taking me out. And then once I saw my broker take me out like a small amount, I started slamming my button just to get all of it out. Because I'm like, man, why did I just take all of it out? There's no excuse for it, right? But it's just negligence, and it's just bad habits. That's what got me to that point, honestly, was the bad habits, right? There's a few times where I swung a few positions, I'll be honest, and I got out in pre-market the next day.
But can I just ask, because I've done everything that you were doing, and I remember looking at the Cobra bank account as well when I was with Cobra for a period, and I was like, I was up 100K on me overall, and I had a $40,000 account, and I remember being like having $300 of buying power, like $300 of real equity left in the account, because I was down for like 39,500. And I was thinking, why isn't Cobra taking us out? Why isn't this broker taking us out? I've got no equity left. It was early in the pre-market. They didn't take us out. And I recovered 18 grand of it. But I still lost like 26 grand in a day. Dude, it's hard to recover. But so for this, we like, was this kind of like scaling up into shorts, and then with the weight stocks?
Like the size was more or less the same, because after DWAC and stuff, I did size my count up. Like my count was getting bigger, but I wasn't sizing up. If you look at my trades, I wasn't adding more size, because what I liked about the balance was that they were paying me out interest every month. So the more money you have in your account, they pay you out interest. Nice. So I'm like, okay. At the height of it all, I think I was getting like $3,000 just for doing nothing.
Wow.
In interest. So I was like, wow. So this is why people keep big accounts, right? Well, that's why they want to attract you to keep more money in your trading account. So they incentivize you by giving you interest. Right? Yeah, exactly. So I was loving the free money, and when you get treated like a better client, they would give me free shares to short, stuff like that. So essentially, it got to my head, and I guess it was meant to happen. It happened. Yeah. So TOP. Sorry, go on.
So go on. That was like a $200,000 loss. I remember feeling kind of sick, but it's money that it's kind of money that you already won, but it's money that you could have withdrew. But like, so what exactly was the mistake that you made on this loss? You've already mentioned one of it was holding it overnight, but do you want to quickly just walk us through it?
No, I didn't hold TOP overnight. TOP was an intraday, but the biggest one was when I shorted into the parabolic and I scaled. When it came back down, I was actually up a few thousand at one point. I should have just taken that off right away and realized, okay, this stock is a red flag. Like today, XAG, when I was trading XAG, after my third entry, I think I had an entry at $2, an entry at $2.30, and an entry at $2.50. My average was around $2.30, and I saw the way the volume was coming in, and the way the volume was coming out of the other stocks, which were DUO, and I believe there's another Chinese stock. So that's what made me realize, okay, this is like, I need to get out. And I got out at a $50 loss. As soon as that first flush came, I got out pretty much at my average. I marketed it out, whatever. I had to go. But at the height of that, I was down like $300. So I got out in a very strategic manner. Whereas in TOP, when you get out in a panic, you're gonna always get the worst fill. You're gonna get the worst spread. And obviously, if you're getting out in after hours and you have 10K shares on a thin name, your first fill could be at $25 and your second fill could be at $35. That's pretty. Yeah. That's the way it went down, and I had too much size, and I the way I was doing it the whole time, I didn't do it that way on TOP. But essentially, what I realized now is holding a short overnight. You're putting yourself the second you go into the after hours or the pre-market, and you're holding a thin name. That thing can do anything, man. It could go like TNON. I don't know if you still.
Not in the last month or so in that, but I understand, dude. Like, dude, I'm the king of swinging. I'm the king of being stuck with too much size and short positions going into after hours. I'm the king of it. So I'm very knowledgeable.
Yeah. So getting out before after hours is good. Ideally, you don't want to wake up and get a TNON where the thing went from $5 to I think $102, and I think the broker didn't take a lot of people out. A lot of people got lucky, but someone got taken out. If that thing hit on 102, someone got taken out. So someone probably lost a lot of money. So that's one thing I've implemented in my future is, okay, do I have a plan to swing? Am I going to swing stocks that are trading thin? Out of all the China stocks today, I traded DUO because they had a 7 million float. And I know it has a bigger float. So even if I get stuck in this thing after hours or something, it's not going to go as crazy as something that's thin, right? Like QH, or no, not QH. Which other one? XAG was trading very thin. I think it's like a 1 million float. ZCMD is a 1 million float for sure. So these are just the China names that were going around recently. So, but either way, I just want to trade intraday. And if it's getting to the point where I got to swing, I got to just take the loss, because that's not something that I'm willing to do at this time. Maybe in the future, I'll implement something like that. But that's definitely something. I'm not trying to do.
No, but like a lot of people think like it's not gonna happen to them, or like it's not gonna happen to me, or I'll get away with it this time. Like you absolutely cannot like average in too much size to a short, especially on a thin name, especially on a low float. And sometimes you don't even know the float, or sometimes the company's bought up the float, so it looks like it's a
Yeah,
big float, but it's actually trading really thin. Or maybe you don't realize it's trading thin. Then after hours, it goes really thin. Like you
yeah,
just no matter what, like you can, unless it's like Tesla, right, like a real company, like
uh-huh.
you cannot like and you cannot hold big size stuck in a short overnight. It's just like, and people think it's not gonna happen to them, but if they look at it's I really appreciate you coming on, really appreciate you showing the transparency. Like, we need more people like this because you're showing to help people like what can happen if you hold too much size after hours.
Yeah, essentially, yeah, this spread and the spillage. TOP went to 240, so if I didn't get out, I got out right at the after hours bell, like literally like 30 seconds after. If I did not get out at that time, and I just kept holding, this thing hit 240, so it would have cleared out all my money, and I wouldn't have been able to trade again. So,
Oh, they took your
luckily,
entire account.
yeah, I would have taken my entire account. Yeah,
But look, you've got to think at the end of the day, like you've still done what most traders will never do. Like it's like tough to hit nearly 500,000 and then be back down to like 174, 175. But you've just got to think like you know enough to make the money. Really one silly mistake, like one kind of silly mistake.
yeah.
But it's gonna be a cup and handle though.
It's been yeah, exactly. It's been 3 years. I mean, I to put into perspective, I've been trading for 3 years now. As of September, my premier broker was my first premier broker I opened 3 years ago. It was September 2021. So I just tell myself, you know what, man, this is not one of those things that, it's not a get rich quick. It is a get rich quick scheme in a way because things can happen fast, but it's one of those things that you need to put in the work, a lot of work. Like lately, I've been putting in more work than I ever did, to be honest. And this past month, especially. So, and it's catching on. Definitely catching on.
But look, if you've already cleared just under a couple of 100K and you were up 500K and you're putting in crazy amounts of work and you already have the talent to show that you can make the money, then I'm pretty confident that you'll bounce back. And it's fantastic to log this episode now while you're in this position because you can always look back on the episode and be like, look, this is where I was, this is what I thought, and then in a year's time from now, and say this is where I am now. How old are you now, by the way?
I'm 30, so I'm about to turn 31.
You've got lots of time to turn it around. And I mean, what would you say was the top couple of lessons to summarize from the recent losses, just to help kind of new traders, and then we'll get into some charts.
Okay, perfect. So essentially, what I never did, which I should have done, and it's extremely embarrassing because I've paid for a lot of mentorship courses, right? Like I've done MIC, I've done Investors Underground, I've done, the Deckmar thing. I've looked at a few other things too, but there's one thing that they preach that I thought I was too good for, and it's to wire out and it's to use stop losses. And I didn't do that. I did wire out quite a bit, but since I was pretty well capitalized in my life, I wanted to use the money towards my trading, but I wasn't experienced enough to trade that much money, right, at the time. So I still don't think I'm experienced enough to trade that much money. So that being said, I should have wired out and I should have had a max broker loss. And I know everyone says this, but I have one now. I have on both my accounts. I have one. Yeah, you need a max broker loss, but it should never get to the point where it kicks in. You should be stopping yourself out before it comes. That's the thing. So what people don't realize is if your broker is taking you out, if your max broker loss is coming in, then you're not in control of your trade because you should be cutting and then getting back in, getting back in type thing, right? So yeah, all the mentors they preach that, and I had all the resources, so it really is my fault. So I would encourage someone to do that, and paper trade or trade with really small shares starting out. Paper trading is good because it gives you screen time, but it doesn't get you experience with getting fills, because getting fills is a big part of trading. You can't just be trading anything and everything, especially if you're going to use size. There's some things where I only trade with like a couple hundred shares. Well, nowadays I only use a couple hundred shares, but even back then I wouldn't trade a thin name with thousands of shares. Sometimes, because some scalps are okay. You get $50 there, $100 there. That stuff adds up.
No, I 100% agree. And I think I agree with you on that. Max Loss used to use it as well. And it's just reinforcing a bad habit. Like if you let yourself get took out by the broker, you're just reinforcing that you don't have control of the trade. Like I completely agree that you should have it, but exactly the way you've said it. It should be like in case you fall asleep, in case you pass out, in case all of a sudden you run out of the shop and you forgot that you're in a position, like or the absolute last case scenario, you should be getting took out. I agree with that. So we'll take a quick look. At some of your charts. Let's say exactly the kind of trading style that's made you potential like without got you up 500,000, and then that's up 200K right now. So let me just bring up the chart.
Yeah, we even encourage people to invest in software like Trade Ideas. It helps a ton because I remember at first I was cheap and I didn't want to do it, and then once I did it, my game like amplified because you're kind of watching the market through like a lens, right? It's just the cost of business, and get an evening job. There's another thing I'd recommend. Focus on the market. So if you got to work outside, work the evening shift, and so you can be there for the market because you got to put in screen time. Without screen time, it doesn't really work.
Yeah, it's totally agree. Okay, so we're just gonna have a quick look at your charts right now. This is a particularly interesting one. I'm not sure what name this is, but are you going short here? Or are you're scalping long? Yes.
I'm scalping short. So this was back in 2021. This is pretty much how I started out. I would just have limit orders in on momentum. I would set limit orders. So let's say I have one at 11, one at 11.20, one at 11.40, and they would all be relatively small, like let's say 200 shares on relative to my count size at the time at least. And once I would fill on a couple of them, let's say I filled on a parabolic into 11.20, 11.40, so my average would be 11.30. I would just take the flush on 11.20, 10 cents, and then I would expect the stock to go higher. So then I would start out again at 11.60, 11.80, 11.99, because I would always do 99 for the full dollar mark because I noticed sometimes it wouldn't hit the full dollar mark. It would always stop at 99. That's just something I did. It worked a lot. It worked a lot more than you can see. Again, this is just one chart. I forgot which ticker this was, but this is, I think, the end of the day into like this is like the last 2 hours, because the last 2 hours is when stocks will really get going because all the people that are stuck short for the beginning of the day would be stopping out. And that's when I would start doing these scalps and I'll just get in. But the only bad part of it is I would never get the other side of the move. So it was really reckless now that I think about it. But it's just what worked for me back in the day, right? It was a different market.
But you're like fighting the trend here, right? You're scalping, fighting the trend, but you still found a way to like make money based on kind of the tape reading and the level 2.
Exactly. And you're kind of like you're reading the price action, and the price action back then was way different than what it is now. Way, way different. It's so hard to explain, but things would just give you more parabolics and then they would give you that flush to get out. And I noticed even when I would paper trade and when I would watch like tickers, I realized if you get a couple fills in a certain range, you almost always get that flush. It might not be like a massive fade, but you might get a 10-cent flush on your average. So you can just get out right there and you can just plan higher. If it goes higher, I'll just move on to the next stock and do that. Okay, if that doesn't go higher, next stock. Next thing you know, you've done that a few times and you have a couple hundred banked on your day, right? So that was the logic I had coming in. And man, that market was something different. Like we're never going to get a market like that again. At least I don't think so. So that's why I think I capitalized well at that time. Obviously, it'd be nice to be able to trade the backside and fade it. But I mean, for someone just coming into trading, I'm proud of it. Obviously, now I want to work on things like gap up short, which has been a pattern that's been around forever. So that's something I'm looking into extremely hard. I'm doing data tests on. I'm taking every gap up short candidate's chart and putting it in my computer. That's something I'm looking into now. But yeah, this stock isn't a gap up short. This is duo from today. So this is the way that I scalp. It looks a bit reckless on that parabolic on the 11 a.m. mark, but each arrow is 10 cents apart on that 11 a.m. push. So what's that? 6 arrows, and each arrow is about 375 shares. So I think at the end of it all, my average was 325 at 2,175 shares, which isn't all that much.
Not bad, yeah, not bad. That's not
Not
bad,
much.
was it? Not far off
Yeah.
the
So yeah. So I was like, okay, I was willing to add up until 399, and then at that point, I would give it another look because at that point I would have what? I would have 3,750 shares, and my account is it's not massive, but it's up there, you know. So that's 3,000 shares or even 4,000 shares for an account for my size isn't a big deal. I could take $1 loss on that and be okay. That would be $4,000 loss. But just the statistics of it happening aren't high. They always give you the flush before they run it back up again. And if that was to come, like when it came back down and filled me right there at 325, I was going to start scaling back in higher if it went back higher at like 389, 399, 4.1, so on and so forth. Um,
Is that you out all? Is that you out all on that green ticket at 11 o'clock?
it's all of it, yeah.
So you're out all more or less each time. You're in on the arrows, and then you're out everything each time on the green ticket.
On the green, exactly, yeah. And it's like it's just something I've been doing for so long. It's not like an amazing strategy. As I've realized, as long as your stops are, you have a plan for your stop and you have a broker max loss, it can help mitigate the damages. Ideally, I usually do have the bullets spread out a bit more than that, but on a ticker like DUO, I realize, okay, this thing is a bit heavier than all the other China names running, and the other China names running XAG at the time had a lot more momentum. So I was going with my gut that this go up and come down hard, and it did come down. It did come down. Just I didn't want to wait because once it hit, I got my 10 cents. I you know what I mean? I panicked a bit. I'm not gonna lie. My original plan was to take the cover at like 310 or 305, maybe even $3, where the 90 MA is right there on the chart. But I took it earlier, and as you can see, well, it's back up at $3 now.
You're never gonna get that home run, are you? That's not that it's good to go for home runs, but you're never gonna get that 10, 20, 30% trade.
You gotta hold
you
longer.
protect yourself.
Something I gotta work on. Yeah, there you go.
Because there's nothing worse than thinking that you're up on a trade, you've got a lot of size on, but it started working. What I've seen a million times is that double bottom. Then you've got the higher low. You can actually see on the chart, after the parabolic, you've got the double bottom. Then you've got the higher low. It's that ABCD, but then it fails. But I've seen a million times that go to 4, 5, 6, 7. It's just didn't today.
Exactly, right. And that dump is from the markets too. So that's like a macro related dump. But see how it recovered right away. So this thing is still in play for tomorrow. But yeah, so I'm trying to get away from these type of plays. Obviously, they're in my playbook. As long as my stops are in check, I can at least be profitable on them. And if I have to reevaluate in the future, I will. But what I am looking into, obviously, is the gap up short. That's just another one of the same strategy. This was back what... Sorry, go on.
No, I was saying this looks more like a long, is it? Or am I missing an arrow?
That's a short too. Yeah, that must be a short.
Oh, yeah. No, I can see. Yeah, it's on the same. It's on the same candle. Yeah.
Yeah. So back then we were getting a lot of parabolics and then dump straight down, and that's just me expecting it to go higher. So then I had a limit up higher, and then it just came down. A lot of this is reactively, being instinctive towards the price action. So a lot of it I can't even vocalize, if that makes sense. But yeah, like I said, I'm trying to move on to different things in my playbook. Like the gap up short is something that I've been looking at very extensively, and I want to do it different than how everybody else does it, because if everybody else is doing it the same way, it's not gonna be profitable. So I gotta figure out a way that's different. That's what everybody else has to do, is essentially figure out how they're gonna do it. So I gotta take my profit. That is the first red day, I believe. Yeah, might be a gap up short actually.
But
that might be a first red day.
This is a lot simpler, right? You've got your resistance lines. You've got is that yellow line VWAP or an EMA, and then you shorten the pop after it's already broke down. It's a bit more simple.
Exactly.
Bit easier on the heart.
This was before TOP. That's when things were clicking. You know what I mean?
Yeah.
Yeah. So exactly, that was pretty laid out. I think it was a multi-day runner, so it might have been a first red day. But OCTO the other day was a gap up short, which I did well on the entry, but the exit I did not do well on. I wish I did better on the exit. Um, and there's a lot of them. They're coming by every day, and from what I've been tracking them, they've been doing really well. It's just sometimes they'll run it back up, and there'll be games. So ideally, if I'm short something, and it's moving up at 10:30, I don't want to be in it. Or if it's making new highs at 10:30, I want to at least be cautious. And what I like about trading market hours is you can set a stop, right? Whereas once you set a stop, you're like, okay, you can just set it and not walk away, but I can look away a little bit. So,
Which is the ticket? OCTO.
yeah, if you go on the chat for Zoom, you can see I sent you the chart.
Okay, so we're looking at OCTO. This is your first. This is a gap up short. This is what this is what you're moving towards now.
Yeah, so essentially you can see I got my entries in the beginning. As it failed, because once I got a certain percentage out of the way, I take my profits. And essentially, if I can do it every day, I can have some sort of padding, right, towards my day. So it's not like I'm going to get the full fade, although there is edge in getting the full fade. If everybody goes for the full fade, there's going to be games. So I took everything out. You can see right there, and there were games. So I had limit orders set up. Up near, I use the halt bands as a guide a lot of times, especially when it's a thin name. I think this was like a 1 point something million flow. So all those orders got up top on the 10 a.m. candle got filled. The last arrow was right before the halt. So they hit it up to the halt level, got everybody stopped out. I had a fantastic average. I think it was like 440, 450. But I took the flush right away, which honestly, if I held it, I could have made double, right? And I didn't get back in at 11 when I should have got back in at 11, at least a starter, and risk high of the day, which I didn't do. And then look at the fade at the end of the day. It was beautiful. So that's something I'm trying to work on now.
But do you have any type of criteria or anything that you're looking for, any kind of edge that you're trying to research in these gappers? I know I made when I made the 100K, I made it on gappers, so I know them well.
Okay, great. So yeah, float is one of the things I do look at. I know people like the low float ones. It's just personally, I've noticed when they're like nanos and stuff, the cost to borrow gets very high, and I don't like to put. First of all, I'm only going small size right now, right? With this setup until I feel more comfortable. But I don't like to put too much money down on locates right away, because then what's gonna end up happening is I'm gonna trade it wrong. I'm gonna want to get it right away, and then I'm gonna scale aggressively, and I want to scale proportionally. I don't want to scale like I don't want to throw too much size at one place. I want to be ready. Like on OCTO, I was ready for this thing to go to $5. I was ready, and I would have. My first entry was 419. My second entry was 439. My fourth entry would have been 20 cents apart, so on and so forth. Up until 499, I would have been scaling my average because I'm ready for other people to stop out. But I know for after that, 520, where my next ad would be, that would be a buy order because that's where I would stop. So once I have that criteria in place, it just seems like it's almost like you just do it, right? You don't have to think about it. And most of the time, when you get that initial flush, I just take it. Like that was a 30 cent flush. I'll take it. And if it's like on a couple thousand shares, 30 cents, I can at least pad my day and start my day with a little bit of a cushion. And then I can go back to doing what I do with my scalping, or I can just move on and go do something else with the rest of my day. But I do like covering the initial flush. I don't like sticking around all day. That's not something I like.
No, but I understand what you're doing, because what you could have done is add to a winner saying, I'm going to play the all day fade, going to take the whole day, and average to the winner. You put too much size in the fours, and then you stop in the 440s, and then you give everything back.
Yeah.
So in some ways, it's like safer to just lock in your profits at 4 and say, I'm done. Actually, I remember when I was trading gappers and I was making the most money, I was doing exactly this. Shorten the open, covering the dip. Shorten, waiting to see if there was another squeeze. If there was, and it looked like it was topping out, shorten the squeeze, covering the next step, and leaving. And I remember leaving 10, 20% every single day on trades, but still made 100 grand. and I wasn't trading that much size. It was a small account. It grew and grew and grew and grew. It was like a $600 account. So I don't criticize this strategy at all. And obviously it's worked for you, but I'll just exit screen share 1 sec. We'll go back full screen. So very, very, man, you've had a really interesting journey, a really interesting trading style. So just to sum it up, the averaging up, and then getting out for the 10-cent profit, that's something that you're not doing so much now, or you're trying to get away from it?
I will do it, but I will do it with such small size that when I do stop, I'm not giving back like a week or something. You know what I mean? I did it on DUO today, but every bullet was like 375 shares or something like that. So at the top of it all, my size was 2,000 something shares. So at that point, I don't mind taking $1 on my average. You know what I mean? So even if I lose $1 on 2,275 shares, I'm only losing $2,000. So at least I mean, right now I'm not making that in a week, but I know when I start throwing enough trades out there, that would be about a week's profit. So that's pretty much what I risk. I know that they say you should risk like a day or two worth of profits, but this is just the way that this strategy plays off for me. But there are a lot more opportunities with this style. That's the thing. You get a lot more tries, if that makes sense. Right?
No, it makes sense. But I mean, it's like, I understand what you're doing completely, and I can see how you've really, really, really got the probability on your side, but the one time it doesn't work, it's going to hit you. But I mean, but you know that it makes more than a week's profits before you lose a week's worth of profits. The strategy makes more than a week's of profits before. So it's a bit up and down because you feel good a lot of time with these small scalps, and then every now and then you're a bit upset because you just give a week away. But long term it works. That's the most important thing.
Long term it works. Exactly, and that's what I've seen so far right now. And this is like a much harder market than there was back then. Back then, the stocks were much more, I guess you could say volatile, like in a sense that they would go 550, 520, 555, 515. So you could literally juggle a stock. What would you call that? Right? Stocks would do that a lot more before than they do now. Now they kind of move in a very algorithmic, I guess, way. I guess you could say computers, maybe. I'm not sure.
Yeah. Yeah, I understand what you're saying, and then the other strategy. So most of the money that you've made in terms of that 500K on the run up, that was literally the strategy that you were doing, the scalping strategy which we just discussed.
Yeah,
crazy. You made $500,000 doing that.
Yeah,
crazy,
essentially, man.
But
obviously, stock selection too.
But and then the only reason why you lost a lot of it is because you held into after hours.
TOP, correct? Yeah.
Christ, it's crazy.
Yeah, when one play does it, it does. It hurts, but at the same time, you know, there is a human behind this thing, and I fucked up, but it's okay, right? I still got chips in the game, you know. So as long as you got chips on the table, we're still going.
Yeah, but I mean, the fact you've had a strategy that is proven to have success over long periods of time, and yeah, you may take a week's loss, but so what? You've got a broker stop involved now, and the only time it really went wrong is when you didn't follow the rules. So it's not like your strategy did that. It's like you let it go into after hours.
Yeah,
that's it.
There was a lot of signs to get out of that play. A lot of signs that I did not listen to, but that was one of them. That was one of the main ones. For sure.
Just before we close out, is there any more tips you can give on either of the strategies that could help new traders with the edge, or do you have any like golden nuggets for anyone starting out?
I think I mentioned this already, but like I said, get an evening job and put in the screen time. Just invest in trade ideas. Use a scanner. The trade ideas, you look into the market. Like I have it set up right here. I look into trade ideas. I know what's running after hours, and I keep track of it for tomorrow. Keep a journal, track everything, track your charts, track the daily runners, track what qualifies for Gus, gap up short, stuff like that. Just do the work. Invest in the software. Don't be cheap. Experiment a lot, because you know you got to experiment with different strategies and stuff like that. You don't want to do the same thing everyone else is doing, and that's pretty much it. you know. But the trade ideas is huge. It's just the cost of business. You gotta watch the market in a different way. That's just my opinion personally, but I think it helps speed up the learning curve.
No, it's been an eye opener, because at first when I look at the strategy that you're showing, it's like, well, averaging up into parabolics, that looks like it could be dangerous for someone like me who has no discipline. But then to see that you've made $500,000 from it, it's just like, oh, to see that you'd made so much before an era not related, it's like, well, no, it works, and not many other people are going to be doing that strategy, so that's your edge, right?
Exactly.
So very cool, man. I really appreciate you coming on. Really, really appreciate you showing the strategy, making it public. Really appreciate you being on Kinfo. And if anyone else wants to jump on Kinfo, join Kinfo Pro is free for a month as well. And other than that, unless there's any final comments, just thank you for your time.
Thank you so much, Matt. Appreciate it.